Hey, Matt, it's Kevin Bullock here from Anaconda Mining. I'm the president, CEO, and also a director of the company. And I'm happy to be back on Crux to update your viewers and our shareholders and potential shareholders.
Good
We've
man.
done quite a bit since we saw you last.
Well, I appreciate it, and that's why I'm calling. There's a ton of stuff to get through here, and I wanted an update. We saw you mid-November, but you've managed to kind of cram in a lot since then. So, got to maybe kick off with your reaction to your last quarterly, right? It possibly wasn't what you expected. I mean, what was your reading of that?
Yeah, well, the second and third quarter results were us struggling to get a new mine and mine plan going at Point Rousse called Argyle. And we got through that, redeveloped a mine plan, reset guidance. And then in the fourth quarter, we actually did quite well. And we tracked that new mine plan. So we know we're back on track at Argyle to continue with our long-standing free cash flow that helps us support our programs going forward. And I think people missed might have missed the boat on understanding that 2 quarters to get an open pit mine going, a new mine going, really not that bad. It takes a while to understand the deposit and get it going. We're well on track now and guiding very, very well according to the new mine plan right up till today.
Okay, so obviously people looked at that free cash flow they had there because it covered a multitude of costs for you. That is back up and running. So that was planned, but people not paying attention may have misconstrued. Is that what you're saying?
No, I think it wasn't planned to have quarters that weren't great, but it was to really do some pushbacks and some waste development that increased the strip ratio. So the actual financials didn't look good, but it was to set the mine back on track like it is today to continue with free cash flow.
Back on track, but not playing catch up.
Correct.
Okay, got it. Okay, I'm more excited. So it's cash flow. The ATM. Sorry, you better be careful. You call it a cash machine over here. Is back up and running, and we'll be throwing off cash, which is great. Life of mine continues to be okay.
Yeah, you're right, Matt. The other thing is we are finalizing a mine plan for another target called Stoddard Tight that will become reserve and the subject of more mine life over the next couple of months.
Got it. Okay, so that part of the business ticks on nicely. Great, got it. I want to talk to you about Goldboro though, right? Because you really kind of motoring along here with that. First of all, feasibility study. I mean, do you want to give us the highlight numbers on that?
Yeah, I mean, it's been a fantastic run for us since we saw you last. Simply because we filed our 43-101 report that was the subject of the feasibility study that we announced in December. So this will be new for your viewers that haven't seen this yet, but it's a very, very robust project that's showing an 11-year mine life in the open pit mining phase only at 100,000 ounces a year. And the initial CAPEX is quite low at 271 million Canadian, which is even lower than the PEA that we released 6 months ago. But it's showing a 330 million after-tax 5% discounted NPV and an IRR after tax of over 25%. So an unbelievably robust project. But what we like most are the unit cost numbers. Our operating cash cost is $773 an ounce, and our all-in cost is $849 an ounce. I mean, these are tremendously low numbers, and it will be a very robust project through the open pit phase. And that's mining 1.1 million ounces of reserve now, as we can call it, of open pit, before we even get into any of the underground opportunity that's sitting at 2 million ounces of resource.
Okay, so this thing is potential throwing off a lot of money because the cash costs are good. You got a reasonable reserve to kind of kick off with, but Newfoundland stories these days seem to require, I don't know, some real serious imagination involved because and there's a lot of comps. How are you finding the Newfoundland gold story scene at the moment? Because you're trying to build something real that's going to produce cash flow, and you're reasonably far along the process here. But is it easy to get attention if you're not kind of throwing off a large scale, high grade pit story?
Well, ours is the highest grade undeveloped open pit project in Nova Scotia. It is the largest gold deposit in the province. and it will be the next gold mine built there. So it is getting a lot of attention, and it will be very robust. And after that, it'll be into the underground phase, which we'll do a feasibility, second phase feasibility on in the future.
The reason I ask that is because, I guess compared to most gold share price charts, you haven't done too bad. You've moved sideways, right? And I think a lot of people came off in the last quarter of last year, and trying to get and generate interest in gold investment stories has been tough for the last 6 months, I think. So when you say a lot of people are looking at this, who are you out trying to attract? Because there reaches a stage where a company doesn't actually want much more retail investment. They're looking for institutional investors. They're looking for, that kind of bigger chunks of money. I mean, how are you coming at that?
Yeah, exactly. We started with this aggressive growth plan a few years back, and we had 7% ownership institutionally, and we're at 22 now. And we want to get that up. And we keep working on institutional involvement in telling the market. We fortunately, we've had a few new analysts covering us, which allows us to market with them. So that's been well too. So I think people are just looking for, are conscious of risk. And as you get closer and closer to site of permits, that is when things really start to run, and we're getting it.
Right. Okay. So just on that, a couple of things. It's all interlinked, because you've done, like I say, so much since I saw you in mid-November. It's like, let me start with the two hearts, okay? Because again, they're starting to paint a picture for me, and I guess the picture you're trying to paint for the market is that you're more certain of what you've got, and you're bringing on the big boys, right? So when you talk about the two directors, first of all, and what that's allowing you to do in terms of the conversations you're having with institutions and brokers.
Yeah, well, I mean, obviously we're growing very rapidly as a company, and in order to match that with our directors, we've actually brought on two new directors that did a lot of due diligence before they came on. Two fellows named Ted Cavana and Rick Howes, and these are giants of the industry. I mean, Ted was involved in many financings through SocGen and Standard Bank of South Africa over the years. And Rick Howes, he's a mine builder who has done this many times before, and has won awards for innovation and technology and in certain mines that he's built. So these two gentlemen that have agreed to join really see the big picture as well.
Right. So Rick in particular has kind of got a good seat. It certainly attracts me. But in terms of coming back to the types of money that you're going to want to come in here, because clearly you're going to need to get this thing, the CAPEX component of Goldboro funded. But before that, in terms of investing into the company and having those conversations, is that again part of the picture, the part of this picture you're trying to paint for the marketplace? Because, like I say, you have a certain size. You're 125 million market cap, right? But it doesn't feel like you're being rewarded for where you are with the various projects. You're a gold producer, albeit small, but perfectly formed cash flow there. Goldboro has got the highest grades, as you've described, and you've got an open pit scenario and then moving to underground. It seems like a very advanced story, but we're not seeing the rewards there. I mean, what's the purpose of bringing on guys like that?
Well, I think there's two questions that investors need to ask when they invest in a company that's starting with a new project, and that is, are they going to be able to fund it? Should they get permitted? And do they have the capacity to build it? So the two new directors that we brought on, Ted Cavana is, I would say one of the best guys to have who could be looking at the project finance package and understanding all the nuances that come with that when you're talking to various parties that might want to get interested in. And then Rick Howes is, as well, building mines in the past. He's done this before. I've done this before. So we're building up a team of directors and people in-house that have done this before. We by no means think we can build this ourselves and mine it ourselves. We are going with contract mining because of that. But we do have the management and directorship of somebody that's going forward, of a company that's going forward to actually build something.
Yes, it's kind of interesting. I was talking to a company you're probably familiar with, Resources, and the CEO there was talking about creating a sort of layer of stories to kind of continue to demonstrate the kind of growth components, right? And if you're looking at what you've got the producing component, you've got the development component, and you just announced recently the drill programs for Point Rousse and also Tilt Cove. So you've got the exploration component there. Do you find that, again, when talking to institutions, they're understanding what it is that you've got, or are they finding it just too many moving parts to comprehend? I mean, what's the pushback that you get, if any?
Well, I think that most understand what we've got as far as exploration, development, and production. However, on the production side, it really is a rounding error for large companies. So, the story of pushing Point Rousse as the story of Anaconda has long passed. I mean, it is the cash engine. It's basically the bank that supplies us money that's non-diluted while we're mining and making money there in free cash flow. So it's no longer our story, but it is a nice cash generator that allows us to get where we are without diluting existing or future shareholders.
It is, but just coming back to that kind of layer cake approach of what you're going to be able to come to the market with, and again coming back to the way the market is valuing you is the significance of what you're doing at Goldboro and what you're mapping out there, obviously with the feasibility study, now done, is the speed at which you can get this thing funded and into production. So in terms of that timeline, what should we be thinking about here? I mean, how aggressive are you going to be?
Fortunately, we're working on a new discovery, putting a mine plan around it called Stoddard Type that'll come online after Argyle, which we're currently mining.
Okay.
But the announcement last week of a 5,000 meter drill program around Point Rousse on new targets that were generated with a deeper IP. In and around 5 kilometers within the only permitted mill on the island, which is us, and looking for higher grade at Tilt Cove. Because imagine we're making free cash flow at 1.5 grams to 2 grams. Imagine finding 5 to 10, which is what we're looking for at Tilt Cove around a past producer that did mine at that grade.
And again, I want people to kind of walk away to understand what it is, because there's lots of small bits, small progress. Stoddard Type, brilliant, Argyle, great, but it's all just of a certain size, right? So I'm just trying to understand how important Goldboro is to the valuation of the company, not how busy you are, in other areas, and maybe trying to create some blue sky component of the story, or small contribution to the bottom line. It's like, where does Goldboro fit in this? And if it's significant, how do you move that and advance that side of the story more speedily? Because that seems to be that's going to actually sort of drive the business, rather than these kind of smaller projects or satellite projects that you've got going on.
Well, I would argue that the value of Goldboro, the value of our company going forward, is Goldboro. And right now I would describe an 80 to 85% value for Goldboro, and that's backed by analyst reports. Goldboro is the value of the company going forward. And when you look at what the actual NPV is, 330 million, and then if you add the underground component, which we can't in a feasibility yet till we drill it off, but if you add that like we did in the PEA, at today's price of gold, that's approaching $1 billion. And we're trading at under 100 million Canadian market cap.
Right. So that's exactly my point here. It's like, so you're doing stuff to kind of keep cash flowing. You're doing stuff which will be like future near-term cash going. So there's a kind of production component and a value to sort of non-dilutory activity for shareholders. Brilliant. But that's why I want to hone in on Goldboro and where you're at. So feasibility study, you've given some baseline numbers on that. You've told us that it makes meaningful margin once it comes out of the ground. So can we get back to tell me what else needs to happen on that project, that asset? How much more money needs to be allocated to it? How much more time before this thing moves forward into production? I think that's what people are waiting for, because I agree with you. It feels like a significant business in its own right, and I kind of almost slightly distracted by the other things. So what's coming up next? What do we look for?
Well, you're right. Focusing on what is our future, Goldboro. We said that we would file a feasibility study in mid-December, and we did. It was robust. We said we would get the technical report done in January, and it was done. And now we're saying, and we have said, that the EARD, which is the most important document to be submitted, the environmental assessment, the environmental assessment report, is going in before the end of the second quarter. That is basically describing the project to government of how we're going to build it and all the discharges into environment, et cetera. That sets the stage for final permitting process, which we estimate to be 18 months.
Okay.
So if that all goes to plan, 18 months, that means at the end of next year, we will be shovel ready. And that gives us a year and a bit to get project finance together.
Perfect. Understood. I understand exactly what it says. And the other kind of component, it's Canada. So we usually talk to people about First Nations, local communities, given where you are in the world, beautiful part of the world. How are things on that front for you guys? Yeah,
excellent. I mean, Nova Scotia is, like you say, it's a first world, it's a first class jurisdiction. There have been signs of issues with permitting with various companies, but they're site specific. So we're in a very industrial area. We have signed a community benefits agreement already with the Ministry of the District of Guysborough, the municipality of the District of Guysborough. And that's for a joint benefit. And we're working on the final stages of signing one with the Mi'kmaq, which is the only local native group that we have to deal with, the only group in Nova Scotia. And everybody is on side with this and backing it up that we've talked to so far. It's in a remote area with heavy unemployment. People are moving out of this municipality, not in. And this will change everything. This actually is going to be, and we'll be coming up with some socioeconomic reports in the next few weeks, but this will be one of the biggest projects in Nova Scotia going forward.
Interesting. Yeah, I mean, I guess it's
creating a lot of jobs as well.
Right. Okay. And in terms of like whether it be local government or provincial government, in terms of their involvement with mining, I mean, how do they encourage it? If they're trying to obviously create jobs or retain jobs or whatever it may be, is there any kind of, because we talk to people, companies in Quebec, and there's got a lot of local support here. What's it like in Nova Scotia and the environs?
It's very good. I mean, we've got Nova Scotia Power that's going to, at their cost, bring lines to within reasonable distances from the mine site that we're working with. We have government that they're, what they're mandating and what they're asking us to do is go through the proper process, which we're doing. So it's a federal process for fisheries, and it's a provincial process for everything else. The only federal component we're doing is fisheries, which requires a Schedule 2, and that's why it's taking 18 months as opposed to 6 to 12. So yeah, I mean, it's a fishing province. It's Nova Scotia, and it's beautiful. And they want to protect the wetlands and the waters frequented by fish, and so do we. So we're going through the proper process, and we're doing all the work that it entails to get the proper permits in place in order to build a mine that's environmentally sound. First and foremost, it's health, safety, and environment, and then the gold bar.
Right. Okay. Actually, we had a whole ream of questions, and I think you've answered just a lot of those. Because again, the kind of permitting component in an area like yours with a lot of water can be problematic. But again, I guess because the kind of historic mining in the district is. These things are just processes you've got to go through. Do you see any other kind of red flags that concern you in the process? We
actually don't see any red flags. I mean, we're always wanting to do things faster than the government timelines, but we don't see any red flags whatsoever. And like you said, there was historic production in the late 1800s, it's called Goldboro for a reason. There's historic tailings in the area that we're working around. So, in my view, over time, we'll be cleaning that up as opposed to doing the opposite.
Right. Okay. And with regards to funding all of this, I mean, give us this slight hiccup with production. Do you feel the need to go back into market and raise some capital, or do you think that there's going to be enough flow coming through to get you through to some sort of FID on this thing?
Well, fortunately, we have a fantastic financial team headed by a great CFO, and we've made plans along the way to ensure that we don't have to go back to the market to get to project finance level. Out of cash and cash flow, we should be able to do that. That doesn't mean we won't go to market. We won't be opportunistic, especially for what we have in Canada flow through, to increase the amount of drilling that we do on exploration, because there's a benefit to being able to raise money at a premium, which is also not diluted to existing shareholders. So it doesn't mean we won't go to market, but we don't have to. And that's really the power of Point Rousse. Even though it's a small value in our company, it's the power of it for us not to dilute.
Right.
Because we're also shareholders as well. We buy alongside shareholders. None of us are founders of the company that are in management at the moment, and we've been buying on the market alongside shareholders since we joined, and we're putting more than our salaries back into the company because we believe in this project.
Right, and then coming back to the kind of the order of play again. I can sort of understand. You made announcements with Point Rousse and with Tilt Cove in terms of a drill program there, but given the future is Goldboro, can you just explain to people why you wouldn't just instead spend that money at Goldboro? And trying to understand that more. I get the feasibility studies complete, but exploration on what could be the future of the company, surely a better use of time and money, isn't it?
Yeah, like I said, we take advantage of charity flow through at premiums. So we always have enough money to do programs at Goldboro, which is where we want to spend the money. We're waiting for permits to drill west of the current open pit resources that we have, as well as the underground resources. We have over 3 million ounces in global resources on the east side of our property, and we have the same strike length west of the current resource. So you can fit another 3 million ounces. So we are going to explore that when we get our permits, which are due really in the next month or two. We'll get our permits, we'll do an IP survey, and we will drill. And we will raise the money we need through flow through if we hit anything, because obviously that's a dynamic event that would be very, very exciting, because there is, the deposit mineralization continues to the west to another past producer from the late 1800s called Dolliver Mountain.
Well, it's literally the next set of questions, so the perfect time.
Yeah, you've got 3 million ounces that we've discovered. You've got mining in 6 shafts at Dolliver Mountain and no drilling in between. And we want to drill that, and we've applied for permits, and they'll come in due course, and we'll be drilling that this winter.
Okay, so and just tell me about
that's the exciting part.
Well, I think it is, because I've got a lot of questions about it. So, can we give me a sense of how many drill bits will be turning? Because obviously, okay, production we get it. We're back up and at the game again. There, we're advancing Goldboro on all fronts. It seems, but the excitement here is always going to be around the drill bit and what the drill bit tells us. So how many drills are turning, or what was the plan for this year? Well,
for this year as a company, we've got a drill turning. We only have 1 drill at Point Rousse and 1 drill at Tilt Cove that are moving around to various targets. We'll have a drill as soon as we get permits in west of Goldboro, and we'll add to that as we go with another drill. And then with a discovery hole, we'll obviously bring in as many drills as we need to drill off something. And that's I haven't seen a better target. You talk about some best place to find a mine is in the shadow of a head frame. I mean, this is in the shadow of 10 of them, and never been drilled by us. So we're looking for a lot of excitement as we move through the permitting of the original ounces we've found. We'll be developing more. We believe this would be a multi-decade mine.
Right, and which we'll hear about, I'm sure, this year and the future. But can you just talk about in terms of the targeting, etc., in terms of the work carried out to identify what you're going to be targeting with the drill bits? Because again, maybe Point Rousse and Tilt Cove would be something I'd be interested in understanding. How did you come up with the meterage and the targets for that? So what work was carried out there? Yeah,
it's all based on geochemical sampling followed by IP, induced polarization. So we've used a new IP targeting method that goes deeper. We're looking for deeper targets because over the years we've been looking for shallow targets at Point Rousse. So we're looking for deeper, higher grade targets, and we've come up with several targets that we put a certain amount of meterage to for initial exploration. Those are the minimum that we'll drill, that 4,000 meters. I mean, should we hit something, obviously, we'll drill more. In Tilt Cove, we've always been looking for deeper targets, and we again, it's geochemistry and geophysics that pinpoint those targets. at Goldboro, west of the current mineralization, there is a government package of information, including a VHF survey that identifies the mineralization through the 3 million ounces that we found west all the way to Dollar Mountain, which I talked about earlier. We will go in there and we'll use IP to further define that VHF. So we know the mineralization is there. We'll further define it, which will get the noses of these anticlinal systems with the IP. And then we'll be able to design drilling north into the north, from the north into the north limb, and from the south into the south limb. And that'll be very exciting. We know the mineralization continues. Is it ore? We have to drill it to find that out.
Okay, I guess you'll keep us up to date on that one. And so just, I know you mentioned it right at the beginning, but with regards to the expanding the future mill feed component, I mean, how are you coming at that, right? Because you obviously, it'd be great to do a, kind of catch up situation, but it's also, you got to be sure and certain of, expanding the potential feed going into the mill from the current reserve.
Yes.
So how are you looking at that?
So the throughput was designed with two things in mind. One is how much ore can you generate from what we found from an underground basis? So for long term, what should the mill look like? And that isn't as high as what you can do throughput wise from an open pit. So then it goes down to, okay, what size should the open pit be? And because we have to have two pits as opposed to one larger pit because of the lake and the river that splits the two, you can only have certain size equipment in there. So what worked out best based on phasing and the mine plan for that size of equipment was a 4,000 ton a day scenario. Now, if we find more underground, that just adds to the mine life at that scenario. If we find more open pitable material to the west, which I've been talking about the excitement, that's when you can look at a throughput change.
Okay. But I guess a bit more data to come. In fact, talking data to come, have you got any outstanding assays at the moment? We've
got, like everybody, we've got assays that are in the lab waiting to be, we've got samples that are in the lab waiting to be assayed. There are backups. There's been several issues with labs. I mean, one was breached, there was cyber breached, so everything had to be sent somewhere else and stuff like that. So the industry in Eastern Canada has kind of slowed down. So, we have preferential treatment because we are the best. We are the best client in the area that we're in Newfoundland and also in Nova Scotia. So we do have outstanding samples that are going to be assayed over the next little while. So we'll have a constant flow of news of assay results, and then we'll have more, obviously, from the drilling that we're doing. So there should be a constant flow all year.
From where? From where are these coming?
From everywhere, from Point Rousse, till Cove, and Gold.
Right. Okay.
So we had drilled.
For Goldboro, how do you prioritize it? Because obviously for Goldboro, in a kind of meaningful way, it didn't make it into the feasibility study. So, okay, don't worry, it's fine. But in terms of how you present stories to the market about what you're doing, right? So obviously for Point Rousse and till Cove is probably a little bit more important, right?
So Point Rousse is to find in and around the mine at Point Rousse is to find more near surface mineralization, like we did at Stoggertite, to keep the mine life going. I mean, we've had a 2 to 5 year mine life for the last 11 years. We continue to keep finding. It's getting harder and harder, obviously, but we're also looking for higher grade 40 kilometers to the east at Till Cove, which would be you wouldn't have to change anything other than the grade would change going through the same mill. And, if you're putting double the grade through, you're getting double the production. It would be a step change. And it would be quick to put into production too, because we have the only permitted facility with long-term tailings on the entire island. And that gives us a distinct advantage when we do find something. It doesn't have to be as big or as high grade to justify its own infrastructure.
Okay. So that would be priority for you. Okay, understood. Well, look, hey, Kevin, let's wrap it up there, because that's something amazing. You've done so much, and we could probably spend another couple of hours on what you've been up to. But just headlines are good. Come back on. Maybe we can get stuck into a little bit more of a technical analysis with you next time, if you're happy to come back on with one of our geos. Just show us how you're approaching that drill, the different drill programs, because I think that'd be quite useful to understand what you were starting to see, and more importantly, what you would, how it's directing your decision making. I think that would be the first.
Yeah, I would love to do that, Matt. And we can also have we can also have someone from our exploration team
Perfect.
to
Let's
do that.
it.
So I think it would be fantastic. It'll be get into a little more technical detail than I can.
Okay, well, exciting year. I think precious metal companies are looking forward to this year. It's suggestions are that we'll see a bit more interest in the equity side of things anyway. So we'll see you soon. Okay.
Thanks very much.